to Nirmal Bang, ladies and gentlemen. I'm Hiraldadia. We have with us Mr. Sandeep Barasia, Executive Director and Chief Business Officer, along with Mr. Amit Agarwal, CFO at Delhivery, joining in. Welcome to the show, gentlemen. And firstly, congratulations for achieving this milestone with regards to going public.
Thank you so much. Very happy to be here, and thanks for inviting us.
Always a pleasure for us. My first question coming to you is, firstly, in the interest of viewers, if you could just help us understand what the delivery business model actually looks like.
Sure. Yeah. That's a great question. So for the benefit of the audience, let me keep it very, very simple. We essentially are a logistics company. It's a very simple business. Logistics is a very easy business to understand. Everything that you consume in your house, every product that your audience have in their house or in their office, whether it's a pen or a chair or the coffee they're using or they're drinking, logistics is somehow involved in the back of that. Because anything that is manufactured in the industry, in the economy, anything that's traded in the economy has to be stored, has to be moved, and that's what we do. We enable that. The difference between us and everybody else, though, is that we are a technology-led company. So we are technology-enabled rather than just being a pure brick and mortar logistics company. And that's really the main difference. And what that has done is that from a standing start of 10 years ago, we are now India's largest and fastest logistics company, a fully integrated supply chain company, as we like to call it. We have 5 lines of businesses. The first one is express parcel, which is e-commerce, essentially, where we bring e-commerce parcels to consumers' houses. We've delivered over 1.2 billion parcels over the last 10 years up until December 2021. So I imagine at some point or the other, we've been to every single audience of yours. We have been to their house with some e-commerce parcel or the other, sometimes multiple times over as well. So that's the first business. In that business, we work with almost everybody on e-commerce, large horizontals, large vertical players, to even people who actually sell using Shopify or Instagram or Facebook, really small items. We work with a diversity of customers there. The second business line is part truckload. This is more B2B, where businesses are shipping to businesses. So it could be a manufacturer of auto parts shipping to a dealer. It could be a textile company shipping to one of its own warehouses. That's all part truckload. And there we are now the number 2 player in the market after acquisition of Spot On, but still the fastest growing by some measure. So, the third line of business is supply chain services. Supply chain services is when you take warehousing and transportation and combine it. This is end to end. So we could go to a company that is actually manufacturing televisions or refrigerators, for example, and then we run the entire supply chain from them, from factory till the dealers and the retail stores. So that's supply chain services. Fourth line of business is cross-border. This is import and export logistics. There we partnered with FedEx, which is the world's largest express parcel company. And with FedEx and delivery partnership, now an Indian exporter, importer, an individual can import and export from around the world, especially North America and Europe, which are India's largest trading partners. And last line of business is full truckload. Full truckload is basically point to point, a truck full of one particular type of customer's goods that we move from one point to another point. Now that business is more like a trading platform for us, where we provide the demand and supply, and we match that. It's like a brokerage business, but it's completely online, and it's a platform-based service. And we add that as a capability overall. So those are the 5 lines of businesses. Every single one of them is tech-enabled. They use a common infrastructure, common network, and common people to actually make that business happen, which is very, very different from what everybody else in the market does.
Right. Thank you for that, concise and precise business model that you've explained to us as well. With this, if you could just firstly give us details of the IPO.
Sure. Amit, why don't you go ahead?
The total issue size is 5,235 crore rupees. Out of this, there is a 4,000 crore rupee primary issuance, and remaining 1,235 crore rupees is the offer for sale. In the 4,000 crore rupee primary issue size, 2,000 crore is for an organic investment in our existing business lines, where we will double down on our investments in existing businesses that Sandeep explained about. We'll be investing across technology and automation in these businesses. 1,000 crore is set aside for inorganic initiatives like M&A. As you have seen over the last few years, we have acquired leading logistics companies in the country like Spot On Logistics and India operations of FedEx and Aramex. And the remaining portion of the 4,000 crore, which is about 1,000 crore, is set aside for general corporate purposes, where we will continue to double down on our corporate teams in expanding the existing businesses and new businesses.
Right.
I just want to point out one more thing. Of the 1,200 odd crores of secondary offer, I think it's important for your audience to note that as a management team, Amit, me, Sahil, our CEO, none of us is offering any shares. The total offering of shares from the company's management of that 1,200 crores is just 13 crores.
Right. So with all of this said and done, how do you differentiate between B2C and B2B? How is the revenue divide?
So that's a great question. In FY19, the company's revenue was 1,600 crores. In FY22, just 9 months of FY22, we clocked over 5,170 crores. And so obviously, if you think of that from a full year run rate basis, we're heading towards becoming $1 billion company in FY22. That will be a 4x growth of the business in the 3-year period of time. The business is growing at almost 50% per annum. Of that business, 57% of the business comes from the express parcel business, which is mostly B2C. And 43% of the business comes from part truckload, full truckload, supply chain services, and cross-border, which is mostly B2B. Now, all these segments are growing extremely fast. Express parcel continues to grow upwards of 35% over the last 3-4 years because the e-commerce in India is still growing very, very fast. So as long as there's growth in e-commerce, express parcel business actually leverages that growth. And B2B underlying market is very, very large. Most of the $200 billion market I talked about that we participated is mostly B2B. And that market is fragmented, full of small players who have never invested in technology, never invested in engineering, automation. And in today's world, where companies are expecting much more from the supply chain partners, post GST is becoming very hard for them to actually offer the services that the companies want. And so that part of our business is growing much faster because we do offer a differentiated service on B2B.
Right. And in terms of services, in terms of the network, if you would say in terms of the domestic side of business, what percentage of India would we cover?
So we cover 17,000. As of December last year, we did 17,488 pin codes. Now we keep adding pin codes every month. Our view is that the active pin codes in India are around 19,200 or 300. Amit, is that right?
Yeah, that's an official list from India Post of about 19,400 pin codes.
Which are active in India. So we pretty much cover most of India. We cover 98% of commerce that must be happening in India. That's my guess. Given that we covered 17,488 pin codes. We cover all the major metro, tier 1, tier 2, tier 3, tier 4, and now also extensive parts of rural. We get to Ladakh, we get to Andaman Nicobar Islands, we get to most of northeast of India, we get to Kutch, we get to Kerala, we get to deep into UP and Bihar, into Rajasthan. So we cover, while we are called Delhivery, we are actually a made in India company and we serve the entire country.
Right. And overall, if you see in terms of the infrastructure as well, we do follow a leased model. So is that something which we will continue, or do you think there is a possibility that in the future we would move to self-owned infrastructure as well?
We are an asset-light business and we don't own any land or building. Every day, over 8,000 trucks operate for us across the country. We own less than 300 of them. The idea behind owning these few trucks is to have a dipstick and experiment new form factors of the trucks and seed new truck types in the market. We have no reason to believe to digress from this and start owning land, building, or large fleet. The economics of owning land, building, and is very different from our business. That's not the business we are in, of buying land and building. And hence we have no reason to believe we will digress from this path.
Okay. And overall, if you see in terms of where growth is concerned, would you say we have started to achieve, one, economies of scale, and two, the journey from here on is to go way beyond breaking even?
I think that is, I think the most important question, Viral, that you've asked, because for investors looking at companies like ours, which are high growth companies with massive headroom, huge growth opportunity ahead of itself, with differentiated technology platform, I think the question an investor will always ask is, what happens to unit economics and profitability as long as it's growth? We believe as a philosophy of a company that for us, growth and profitability are not conflicting objectives. They have to happen together. So, if you look at what's happened just in the last 4 years, the revenue in FY19 to 9 months of FY22 has gone from 1,600 crores to 5,170 crores. Adjusted EBITDA has gone from minus 11.3% to almost break even in the first 9 months. As you yourself said, almost break even in the first 9 months of this year. That's a massive improvement in adjusted EBITDA in that period of time. And all this while, we have reduced the cost of shipping for our customers. So we've done that as well. So our yield on average parcel or express parcel in this period of time for a 1 kilo parcel traveling a distance of say 1,000 kilometers from Delhi to Mumbai has actually gone down from 92 rupees to 72 rupees. While we've dramatically reduced the cost burden to a customer, we have improved our profitability from minus 11.3% to almost break even. In fact, if you go back and look at our DRHP, and if any of your audience do that, what they'll realize is that we also reported first quarter numbers for FY22. In the first quarter FY22, we did minus 3.7. And first 9 months, we've broken even, which means the second and third quarter together would have had to be profitable for us to get there. So now the question is not whether delivery is going to be profitable. Delivery is profitable. The question now is how do you scale up the profit? That's what you rightly talked about. What's happening there is that as we are a scale sensitive business. Logistics are scale sensitive businesses. Global logistics companies tend to be 10 billion, 20 billion, 50 billion dollars in size. And India is a growth economy. It's globally, you have a lot of concentration of logistics companies. It's a consolidated industry. India is a fragmented industry. So how can an industry so core to the economy be so fragmented? So it's a massive growth opportunity. So we're investing behind growth. As the scale starts kicking in, from here onwards, you should see profitability actually also function in a similar manner. So there's a lot of operating leverage in our business, in many parts of our business. Amit, would you care to just explain briefly where the operating leverage comes from?
So Hiral, the operating leverage in our business comes from primarily 4 areas. One is improved utilization of trucks. This is done by using better and larger form of trucks. Secondly, within trucks is to optimize the route. And thirdly, to mix and match the light and dense loads of B2C and B2B. This overall package drives the improved utilization of our trucks. Second is through improved manpower efficiency. As you can note, we have been deploying our capital intensively in automation hardware. And hence our manpower is becoming more and more productive every year. The third area is technology deployment. Through technology, our manpower again becomes more productive in the last mile deliveries and first mile pickups. And as we are deploying more automation and technology, our facilities are also becoming more productive by way of processing higher throughput per square feet of land. So these 4 areas put together drive the operating leverage in our business.
Right. So with this kind of an operating leverage, if you have to consider growth from here on, in the past, we have made multiple acquisitions as well, say from the likes of Spot On or the investment with regards to Falcon, or even the partnership with FedEx. So will it be organic growth as an opportunity for delivery, or will it be inorganic growth that will help us achieve our milestones?
See, we will have twin engines of growth. Organic and inorganic. The underlying market is going to be $300 billion in FY27. If delivery this year and then 9 months did 5,000 crores, sort of a 1 billion track record. I cannot make a forward projection of how large we will be. But if we were even $5 billion at that period of time, we would be still 1.5% of the market. The headroom of growth will still continue to be there, even at that larger number, right? So for us, growth is a given, right? We have to, as a company, we have to grow. That's what we have for. We want to drive growth, and so we will use both organic and inorganic engines to drive growth. For sectors like express parcel, which is growing very fast, in the underlying sector itself is growing fast, you will have a lot of organic growth coming there. For supply chain services, which is just opening up now in the post-GST world, you will have a lot of organic growth. Cross-border, you'll have a lot of organic growth. Part truckload is moving from unorganized to organized, is moving to express part truckload, so you'll have a lot of organic growth. But like we've done with Spot On, or like we've done with the FedEx partnership, I think there's an advantage every now and then. If you find good opportunities to make acquisitions or do inorganic, we will do those because we bring forward some of that volume creation. But what we will focus on is acquisitions in our core business. What we will not do is we will not do any small minority investments or act as a financial investor. That is not Delhivery's business. We will only do acquisitions which are linked to our core business and where we can be the majority shareholder or 100% owner of that business.
Right. So overall, if I have to ask you that, in terms of the business currently, what are those areas, which would be close to the core business where an acquisition would be a priority?
I think I talked about the 5 areas of business we have, and I think I think we would look at opportunities across every part of our business. But we also not just do acquisitions which are focused on the revenue and the core business in that sense. We also look at specific capabilities that we might want to bring in. For example, last year we did 3 smaller acquisitions, or in the last 2 years we've done 3 smaller acquisitions, which are actually capability focused. We bought a company called Road Piper, which actually helped us quite extensively on building out our full truckload platform. We bought a business called Primer Seller, which was specific IP on D2C customers and how we manage D2C customers, which is a fast-growing segment of e-commerce in India. And then we bought a company end of last year, early this year, a company called TR Robotics in the US. Now they have specific IP for drones, and the reason we bought that is to stay ahead of the curve. So as and when drones are actually allowed in India, we'll be ready because we would have our own IP and we'll be prepared for that. We might find other applications of that within our own warehouses and things like that. So we want to stay ahead of the curve. We are a technology-led company, so we think it's essential for us to stay ahead of the curve in terms of technology adoption.
Right. And my last question coming to you is, I know we can't give forward-looking statements ahead of the IPO, but any key milestones that we have in mind over the next, say, 3 to 5 years?
I think we are at a milestone event even now. And I was talking to Sahil yesterday, and when the company was started 11 years ago, actually not 10, I think the founders had an ambition to go public in 10 years time. So we already consider ourselves late by a year, more than anything else. The ultimate home for a company like Delhivery is the public markets. We are a professionally run company. We have an independent board. We focus heavily on governance. Stock ownership in the company goes down very, very deep. Over 600-700 people in the company will have ESOPs. So the entrepreneurial culture is very much within the company. I think the milestone of the company has to be that India needs a FedEx-like business. India needs a DHL-like business. So DHL is there in Europe, FedEx and UPS in the US. We've got multiple $10 billion companies, logistics companies in China. India doesn't have one. For a business that is so core to the economy, I think we believe that it's our responsibility to actually convert Delhivery into that first large mega integrator coming out of India. And that's what we are aspiring to. That's our milestone.
Absolutely. And I think that's what every new age firm in India needs to aspire to be as well. But thank you so much once again, gentlemen, for joining us on the show. Pleasure to speak to you guys. Congratulations once again for achieving the first milestone that you had envisioned probably 10 years ago. And, it's coming in early to you. So good luck for that. Congratulations and good luck for the future, and speak to you guys soon again. Thank you so much.
Thank you.
Thank you, Hira.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.